on that. But Bajaj Auto reported a strong Q3 numbers. Revenues jumped 30%, margins improved by 100 basis points on a year-on-year basis. Factors such as better realizations, cost management and operating leverage aided margins. To discuss this, Rakesh Sharma, Executive Director at Bajaj Auto, joins us now. Mr. Sharma, good morning. Very strong growth coming through, especially because of the low base as well as good growth in the domestic market. But is this 30% revenue run rate something that is sustainable? And what do you see as the next, 6 to 12 months look like in terms of a average revenue run rate?
Good morning, Sonia. Yes, we're quite delighted by the results. The big swing is, of course, as you know, in the domestic motorcycles business, which is not just about the top line growth, but I think the quality of growth which has been achieved is quite good. As we've been saying, our focus is really on the 125cc plus segment, which is half of the industry. And that segment constitutes 70% of our sales now. So this has not only given us growth, but obviously, if you like, compare it with 2 years back, when this whole journey really vigorously started, it has had quite a dramatic impact on the bottom line as well. We've got a slew of models which have all been put in the market in the last few months, and we are quite we know that how they are being received and liked by the people. In the next few months, there's going to be a breathtaking pace at which we are going to introduce a few more upgrades and models in the Pulsar range, which then cumulatively means that in the 125 to 500cc segment, we've got a Pulsar for almost every sub-segment, and it is probably twice the range of what our competition has. This combined with the backdrop of a reasonably optimistic outlook in the industry, 8 to 10% growth overall. Perhaps the 125cc segment will grow even faster than that. And we, at this point of time, are clipping away at almost 3 times the rate of industry growth in the upper half. So when you put all this together, we feel that, yes, we should keep the momentum going in the domestic motorcycles business. The three-wheeler business, as you know, is rock solid.
Mr. Sharma, I'll come to the three-wheeler business in a bit, but I want to, just complete this loop on the domestic two-wheeler business, right? The retail market share has grown at a very impressive pace. I mean, if you look at it, two-wheeler retail market share has seen a 150 basis points year-on-year bump up. Can you tell us what is the market share right now, or, in absolute terms, and what do you see as the two-wheeler retail market share for Bajaj Auto, say by the end of FY25?
Well, Sonia, our first metric, which we all are very aligned to within the company, and that is what I'll talk about, is the market share, retail market share in the top half of the industry. That is our strategy and the metric which we first jump to at the end of the month when the results come, is to see how the market share is behaving in the top half. There, if you see, we have reached about 31% exit of Q3, and we are in striking distance of total leadership over there. Within that, you know that the real home ground of Pulsar and of Bajaj has been the 150 to 250cc segment, which we call the sports segment. There has been a remarkable turnaround over there. We've gained 8 percentage points of market share between FY23 and December. So what was 32% in FY23 has now gone to 41%, and we are looking for more on the basis of the product launches and upgrades which have lined up, which I just spoke about. So in the upper half, it's a very good performance. In the bottom half, which is the 100cc segment, the market share is sort of eroding, particularly in the 100cc executive commuter segment, and which is 50% of the industry. We have decided not to play the red ocean game over there, but just to go along with the industry in that bottom half. So because of the weight of that segment, the overall motorcycle market share has moved up only by 1 percentage point. But in the strategic area of focus, it's a substantive jump forward.
Okay. The market share in your electric two-wheeler segment has also been rising. That's because of your expansion of the distribution for the Chetak, right? So the e-two-wheeler retail market share, I think now is at 13% as of Q3 FY24. What are you targeting since you are expanding your distribution in Chetak further? From this 13% market share in the e-two-wheeler space, how much do you think you can take it to over the next 1 to 2 years?
Well, the exit market share was around 14%. Unlike the more mature motorcycle category, where there is a certain kind of equilibrium established, etc., the focus of our focus in the Chetak side is to continuously improve our volumes month on month and quarter on quarter. So, at the beginning of last quarter, we had said that we'll breach the 10,000 mark in quarter 3. Now we are saying we'll try to breach the 15,000 mark in quarter 4. So capacities and other things are being lined up, have been lined up for that. Now, where exactly the chips fall depends also on competition. There have been, sudden moves, surprise moves. So we are really not focused on market share beyond the fact that we have to be on the podium. But the most important thing is to continue to significantly keep increasing the volume, and then let's see where the share comes to.
Okay, I wanted to talk a little bit about the export market, because although things are not as bad as earlier, the recovery is still much slower than what the street was expecting, given the kind of currency devaluation in certain African markets, and now with this whole Red Sea conflict as well. I just want to understand, how long would it take before exports get back to, say, double-digit growth?
Well, that's the million-dollar question, Sonia. Now, it will get to double-digit growth, but I would say that would be more because of the base effect and the weak performance of last year catching up in the comparisons. Right now, as you know, we are our peak was in FY22, right? And we are, about 40% below that peak. The big drag is actually Africa, which is 50% of its peak, and South Asia, which is at 60% of its peak. Latin America and Southeast Asia are both at 107% of their previous peaks. But the weight of Latin America and Southeast Asia in our portfolio is only about, let's say, 35%. So as a result of which, there is, when you look at the overall numbers, it is, still negative. Now it's the currency devaluation, etc., has sort of ceased. But, the markets have to get used to this high level of pricing. So customers have to digest it. The dollar availability has to still improve. And of course, we are hoping that the Red Sea imbroglio, which has certainly had a bit of an impact in December and in Jan, because of shipping and container availability sort of getting interrupted. But we are hoping that this conflagration doesn't widen, and we should be over that knot in 1 or 2 months' time. But fundamentally, for it to go back to the 200,000 levels, it's going to be step by step, small steps in Africa.
Okay, I understand that, until the situation in Africa doesn't improve, you won't be able to give a call. But you're saying that Africa is still a big drag and is still at 50% of its peak that we saw in FY22. Got it. Just a couple of final questions. The margins were very strong this time. You're back to 20% levels. Are there any more margin tailwinds, or do you think that it will be hard to hold on to 20% given that raw material costs are now starting to rise a bit?
See, it's very difficult to talk about the margins with any degree of finality, but because they are a blend of not just the product mix, but also of the country mix and the BU mix, as you know. because there are 3-4 businesses out there and multiple countries, and each can have an impact. However, given the last quarter, and if we just sort of extrapolate on that basis, we are not seeing any major headwinds on commodities, etc. We are seeing, like I said, the domestic business, both three-wheelers and two-wheelers, firing away. Chetak's contribution will increase. It might just pull back the margin tad. So the architecture is more or less in place. After that, it's a little bit of arithmetic, as to what mix, country mix and BU mix, how that changes. But individually, the architecture of the margin structure is very much in place, and we expect it to continue into the next quarter.
You can hold on to 20% margins by the end of this fiscal, right? Just trying to get at that.
Yeah, I mean, if no wheels come off,
Okay.
because of any sudden events, etc., we are not seeing any disturbing scenario in Q4.
All right, we'll leave it at that. Thank you, Mr. Sharma, for joining in and speaking to us as always. We'll take a quick break on that note. That's the word coming in from Bajaj Auto. More on their interview later through the course of the day. But